Hey, it's Tuesday. Every single day I bring you an expert in different areas. On Monday, I like to bring you, what do we bring on Monday? A money expert.
Yes.
We've had lots of money experts on the show on Tuesday. I like to bring you a sales expert on Wednesday. I bring you April. She's an expert in many things. Thursday's Caleb's show. He's an expert. And then Paul Silver's an expert in having fun on Feel Good Friday. Today is Tuesday. Now, I know my strengths and I know my weaknesses. I'm not an expert in many things, but I am an expert when it comes to sales and marketing. The proof is in the pudding. We have sold tens of thousands of copies of this book. I've sold tens of thousands of cars. I've trained hundreds of salespeople, and I've built a marketing company that has 48 employees. I keep saying 48 because one of my advisors tells me if I go over 50, we're going to have a whole nother can of worm problems. But anyway, we are very, very good at sales and sales training. Now, this is a big deal, what I'm about to tell you. This book has made several people millions of dollars. We're going to get into that just a little bit. But first, I want to talk to you about something that is very, very, very important for the individual salesperson. Now, many times we speak to dealers, to sales managers, to general managers, but I want to talk, by now, I am the salesman's advocate. My mission is to help salespeople hopefully become sales managers, finance managers, general managers, but most importantly, build a brand and become super successful in sales. So Smiths, I'm going to need your help on something right here. Can you pull up? I'm doing this totally impromptu because I know my material, but I do need your help with a few terms because I want to make sure that I'm very accurate. Can you give me the definition of branding, please?
Branding.
Oh, you got to turn your microphone on.
I keep muting myself.
Yep.
Branding is the action of oh, that's not right. No, the promotion of a particular product or company by means of advertising and distinctive design.
Okay. So branding, read that one more time for me, please.
The promotion of a particular product or company by means of advertising and distinctive design.
Okay. So branding is promotion of a particular product. Now you're the product, salespeople. Smith, you're the product as well. Regardless if you stay in sales, if you stay with this company, if you move on to become an entrepreneur, if you want to start a marketing, branding business yourself, you are the product. You have to understand that first and foremost, you're the product. We're in the people business. Smith, you are in the people business.
Absolutely.
You may enjoy making videos. You may make videos as part of that may be what you produce, but you are the brand and you are the product. You were able to sell yourself to me in such a way that, you know what? Come be my production manager. Your videos didn't do anything. You, a person, sold me a person on your ability to do something. So you are the brand. Now, lucky for me, you're not yet the brand. Well, let me say it like this. Lucky for me, you were not yet the brand that is known nationally for all your productions, for all your skills. You were under the radar. Okay. Now,
that's true.
My job is to expand your brand so that we can get my brand out there more. And now that I found the hidden talent that was hidden because you weren't. I still don't think you're on Facebook. I still don't think you're out there. We're going to talk about that just a little bit, and that's fine because now you have another angle. Here's what I'm going to tell you about branding. First of all, you are the product, so you have to brand yourself. You have to promote yourself. So let's look at marketing. Can you read me? Do you have that pulled up?
Marketing, the action or business of promoting and selling products or services, including market research and advertising.
Okay, let's make it simple. The action or business of promoting and selling products. Okay, So branding.
Let me go back to that one real quick.
Yes.
Branding is the promotion of a particular product or company by means of advertising and distinctive design. So I guess,
but not necessarily selling, right?
Right.
So you can brand it. So branding comes first and then marketing. I think you can blend them. I think you can almost use the words interchangeable. There's a slight difference there. I'm not going to get bogged down in the semantics. I'm not going to get bogged down in the definition. I'm going to tell you this. If you want to make a lot of money, you need to know how to sell. And if you want to make a lot of money, you have to know how to brand and market yourself. So I'm going to give you some pointers right here. I'm going to give you some pointers of how you, regardless of what your product is, most of you are probably selling cars. That's fine. As a matter of fact, it's much easier for me to speak to that. Regardless of what you're selling, you have to brand and promote yourself. So how do we do that? What's the best way to do that? Just like in sales in general, you have to get social. You have to be on social media. Okay. You are the product. So you need to understand that first. You are the product. Number two, you have to post a lot. Because more important than being super skilled, Smith,
right,
is being known.
Yes.
Had Paul not discovered you, my operations manager, and discovered and let me know of your hidden talents, you would either be doing one of two things. You would be typing away as a ninja, or you would have already moved on to something else. Okay. That would have been a tragedy. That would have been a loss for me. Hopefully, I think it would have been a loss for you, because my goal is to provide value to all my employees and reward them because I'm benefiting from them. It's a give. It's a win-win.
Yes.
If it's not a win-win, you're one-sided relationship. That's no good. So more important than being super skilled is being known. So you have to get known. The simplest way to get known is to stand on a street corner and say, "Hey, my name is Billy." You think so?
Maybe if you say it enough. Is that where you're going?
No.
Okay.
That's an inaccurate statement. The simplest way to get known is social media.
Yes.
Facebook is the most powerful tool on the planet. I've met thousands of people. I've influenced thousands of people. I've sold thousands of books through Facebook. Now, 10 years ago when I was doing this, everybody thought I was silly Billy who was obsessed with Facebook. I really don't even, I'm not crazy about Facebook, but I understand the power of Facebook. So a very smart person told me, you need to get attention. So the first thing you want to do to brand yourself is get attention. You have to be posting a lot. I see so many of you guys who sell something that post once or twice a day, or worse, once or twice per week. That's not going to work. Someone asked me, a very good salesperson, car salesperson, said, "Billy, I want to sell as many events as you and Caleb sell. What do I need to do? I want to come down to the office. I want to come down to your office and watch you guys and see what you do." I said, "You don't have to come down to the office. We have a guest. That's fine. Bring Russ in." I said, "You don't have to come down." Oh, he's got on his suit. Yeah, let's get him in here. Bring him on in. We'll make it. Yeah. This is very important. Don't let me skip this. And then we'll come back and we're going to get Russ's take on it as well.
Sir.
Okay. So the first thing I'm going to do is let everybody see Russ, because that's sucking up all the attention right now. Remember, I told you have to have attention. Make sure his mic's on.
Check 1 2. Check 1 2.
Perfect. And you don't have to wear. I have to wear headphones because I speak really fast, and then I'll just jump on to the next sentence. So you're probably a little more control. So Russ came by to check out our equipment. This is some super nice equipment. Joe Rogan actually uses these.
Wow.
And if you watch the Joe Rogan podcast, he'll tell the guys, keep this thing right here. You want it about a fist from your mouth at all times.
Cool.
And then you can speak away from it. As long as you're about a fist from it, it still works really well. So, Russ, what I've been telling these guys about today is the power of marketing, the power of Facebook, and giving sales advice. Now, I'm not qualified, obviously, to give financial advice because I mentioned on the show yesterday, it was the Monday Morning Money show, that I have some investments with you, but then I also like to do my own thing with Cash App. And because I made the joke, said, I told Russ I'm smarter than him. So I'm going to do my Cash App, and I've managed to turn $40,000 into $32,000 so far. So, I'm not giving financial advice. Russ can definitely do that. This is not the financial show though, but I want to go back to a story, Russ, of I had a very, very influential, a very qualified salesperson who's sold direct mail, and he sold different products to car dealers for a long time. He's been in the business, and he started selling. He did a couple of events for us and said, Billy, I want to start selling these events. So he started selling our events to car dealers. And then he said, man, I want to come down to your studio, and I want to see what you guys do, and I want to learn from you guys. I want to sell as many events as you and Caleb, which is my partner in South Carolina. I said, you don't have to do that. You can just look on Facebook. He said, what do I need to do? I want to come down there. I want to learn everything. And I said, you need to post more on Facebook. So about 3 or 4 weeks later, he said, Billy, I want to sell 10 events, 15 events a week. He said, what do I need to do? I said, man, I've already told you what you need to do. You need to post 8 to 10 times a day on Facebook. So I've had this discussion with you too, because, you are an expert with credentials out the wazoo of financial credibility and of being an expert at wealth advice, giving wealth advice. I want to see you in all 50 states. I think you're in 15 or 20 states already. And we had this similar conversation. I know there's laws you have to be careful what you can and can't say, but that's pretty close to the same advice I gave you was, hey man, please give us some of that expert advice on Facebook and let the world see you.
Well, one of the most frustrating things for me and Billy, our friendship has helped me to work through some of these things. And I think I'm getting much closer. It's just like coming in and looking at this equipment, and it's a wonderful studio you've got set up. I mean, you guys do a great job with it. And, but the frustration thing is sometimes getting the word out. Mm-hmm. I mean, we know what we can do for people, and we know how we do it. I've been doing this for 26 years. Mm-hmm. But one of the frustrations for me has always been trying to get that word out, trying to explain to people what we do, how we do it, why we do it. I think when they understand what we do, they're going to respond favorably to it.
Yeah.
And I think for the folks that you deal with, the work that you do, obviously it's all about exposure. And I've heard all these numbers. I'm not a real good marketer. That's not what I do. What I do is I help folks get more return than the banks are willing to pay. And we have risk strategy. We try to, for a sizable, nobody wants to lose any money.
Right.
So we have a system in place that I believe is going to make you money over time. And we're also going to put a strong emphasis on not losing your money. So these are, but the way we do it, I think the more educated people become to what we do and how we do it, mm-hmm. the more favorably they're going to respond. And we're going to get, so, what's the old word? I think that you may or may not know, but I've been told that, you gotta show people like they're not going to pay any attention to you the first, 9 or 10 times that they see you or your product or service or whatever. But so it takes a number of times we're bombarded by all this noise, and for us to cut through the psychology and all the noise to get our message across is truly a real challenge. And it's something that we, and Billy, I got to tell you, your friendship, and your willingness to help us to try and help people, because ultimately, if you're not helping people, guess what? The old market weeds you out.
That's right. Well, you're right, Russ. It is a very, very busy and loud noise. You have to break through the noise. And that is what you're doing, and that's why I think you're going to start a podcast of your own so you can get the message out there. So, but more important than being an expert is being known. And so the frustration of getting the message out there can be taken care of by simply, and I know you have to follow rules, but being on Facebook and showing people that you know what you're talking about. I was telling them 10 years ago when Facebook was simply a social app that people kept up with, they tried to get dates with, stuff like that. I started using social media to get attention. Jeremy, can you turn some air on in here? It's getting a little hot. So Facebook is the most successful social platform ever.
Yeah.
So let's take advantage of that. So rule number 1 is get attention on Facebook. Now, you don't want to be an idiot. You have to show people that you know what you're talking about. So it's important to be an expert at something and then promote yourself. We're talking about branding and marketing. Promote yourself as an expert. That's easy to do for you. So, I don't know if you can find Russ's post that he made a couple of days ago. Just is it on your personal page or did you put it on your?
Probably my personal.
Okay, yeah, just you may have to log in as me find if you're not friends, but Russ story and I want to show you guys an example. There it is, right there. Show you guys an example of the perfect post, because here's the problem. So many people run out of content. Like, what am I going to post? What am I going to post? And I'm talking to salespeople today. You have to be known as the expert or at least the anti-salesman, because nobody wants to buy. Everybody loves to buy, but nobody likes to be sold.
Yeah.
Right. You have to promote yourself in such a way where you are actually giving away useful information. Scroll down. Let's see if we can find Russ's. Maybe he's been doing a lot of posting. That's awesome. That's great. That's great. So Russ, you have taken advantage, or you've taken some advice, not that you weren't doing well already, but you've taken some advice and you're getting the word out there, putting a lot of content out there, getting people's attention, because you can't sell anybody anything if they don't know you.
Well, go to the story wealth. That may be.
Sir?
I'm not sure which post Billy's talking about, but
you talked about Apple, and you talked about you actually talked about some stocks and some.
Oh yeah. I'm thinking that was actually on the
personal. But you know what? So that's fine. He's been posting so much, it may be too hard to find it. And
but
that's
in fact,
fine.
You're right. I mean, one of the things. I mean, I react sometimes to what my clients are having. When Apple split recently, it had a 4-for-1 split. So for every 1 share, now you have 4 shares. Okay. Of course, they're worth, a fourth of what they were. That's sort of the way that works. But we run a model. Okay. The way that we help manage our clients' money. Is that it? That may be it.
I believe I found it.
Yep. He's going to copy it and paste it in.
But yeah, I mean, this sort of gives you an idea. I just wanted to respond to what the inquiries about Apple and what people were asking me about. So I thought it made sense. So giving that information.
That is a perfect post, though. That's what I'm telling you guys. See, regardless of whatever you're in, you're an expert at something. You are an expert at something. If you're an expert, that means that you have a marketable skill or a marketable service. I'm talking to salespeople. So if you're a car salesperson, if you're an insurance salesperson, if you're a furniture salesperson, I tell you another person who does a great job of showing that they're an expert. April sold almost $1 million. She sold $850,000 worth of furniture last year.
Yeah.
But she didn't get on there and say, "Hey, buy from me. I have the lowest price." Right. She got on there and she talked about things that you or I wouldn't know, but we may be interested in, like
exactly
the certain mattresses or things that are very important to you and me, but that we don't know. So just like your stock post that he posted about, I'm sure you put it in the comments, Smith.
Yes, sir. It did break it up a bit.
That's fine. That's fine. But if you read that, you can see that Russ, who gets paid to invest people's money, wasn't scared to give you some very good, useful information that you could have taken right then. I'm not saying that you said buy or don't buy Apple. I'm saying there's some information in there that could lead you to make a better decision with your money, with or without, without using Russ. But the fact that he's willing to give it and show people he knows what he's talking about is going to in the end lead people to come to your door.
Well, everybody wanted to buy Apple because it is split.
Yeah.
Okay. And one of the things you have to look at is the valuation, and you have to look at there's a lot of factors that determine whether or not a stock's going to go up or down. It used to be just profitability. Now it's more involved than that. You got to look at institutional sponsorship. You got to look at the trend, because so many institutionals now use moving averages to determine when to buy and when to sell, and when a stock's overvalued based on bull sentiment index. There's a ton of different things that go into determining when's a good time to buy a particular stock. It may be a great company, but that doesn't mean it's going to. So when I posted that, I think, just for the record, I mentioned in there that the valuation was very high.
Mm-hmm.
At the time, it was not in our model. Okay. So as far as the money that we managed for our clients, we didn't have a position in Apple at the time I made that post. So if you say, people would call Russ, shouldn't we buy some Apple right now? Mm-hmm. It's split, man. Should we buy now? And do you think? Well, I said, well, is it in the model? Well, no. Well, then I don't think it's time to buy it yet.
Right.
But in this case, I think the Apple was at about 134, and today I think it's about 106.
That's great. Even after a 6% or 3% run back up. So you're exactly right. Have people just bought in at that time, and I know a lot of people who did, then not that they win over time, but they lost significant value.
Well, and in full disclosure, now the model owns Apple.
Yeah. Well, I mean,
okay, but we didn't own it at
after
136.
After a 20% decrease, I can understand that.
It's a great company, and they got a lot going on.
It does. So just putting that out there. And by the way, you put it out there for public scrutiny.
Yeah.
You know what I'm saying? Yeah. You didn't know. Obviously, you had a better idea than most people. It wasn't the best time to buy. But, my point is, you're willing to put it out there and put your name beside it. Hey, it's not in our model right now. And risk it going up, right? But it didn't. So that's what I'm telling you guys, is you have to be willing to give away information. You have to be willing to get on Facebook and make a post that may or may not help you with something right now. But if you're building a brand, that's the most important thing. If you want to sell, if you want to be a top producer, and Russ, I can go into any market in the United States. I'm not bragging. I'm trying to help people understand. I know what I'm talking about. I can go into any market as a salesperson and be a top 1% producer, of sales.
That's right.
And that's because I understand how to use Facebook, and I understand how to use text message selling, and I understand how to promote and give things away and be an expert. So you have to be an expert, and you have to post a lot. I would still like to see you post more. And I would love the fact that you came by to look at the equipment, and Smith, he'll give you a total, he'll give you an in-depth explanation and tell you everything we're using, because I want to see a show where you're giving away information, giving it away every day. Since I've been on this show, man, I have given away so much information. I've had guests that we've given away so much useful information, but all it's done is cause more and more people to start viewing, start watching, start following us. And that is part of the key. I used the example of Smith, excellent producer, but nobody knew it. That was lucky for me, but he could have been doing this for years probably. And, now I hope this turns into something even more lucrative than what he's doing right now by helping me. He does an awesome professional job, but he wasn't on Facebook telling everybody or showing everybody that he knew what he was doing. So therefore,
nobody knew.
You can't,
that's right.
You couldn't sell anything. You couldn't sell your services. Now you're selling our services, and we're going to take it to a complete new level. But we've got to be known first. You have to break through the noise. And that's what we're doing with our shows every single day, 5 days a week. I had a very, very powerful social influencer advised me, and I actually paid him to help me with some stuff. And he said, Billy, you need to do a live show every day, because he's seen some of our videos. He said, you have good content. He said, but you need to block out a time every single day and do a live show. And I'm talking about a guy who's invested some huge, I mean, he's advised Grant Cardone, and just probably one of his top clients. And Grant was just on his show the other day, and he said, Billy, you gotta do a live show. And about 2 weeks later, I was talking to him about some other things, and he called me out just like I did the guy who was wanting to sell these events. He said, have you started your live show yet? I said, no. He said, then basically he just hung up on me. You know what I'm saying? So, yeah. But the next time he's going to be on the show, actually, Ken Walls is going to be on the show on the 26th, I think.
It's next Tuesday, correct?
Is that right?
26th.
I'll make sure. That's a Saturday. I'll get the dates right. But Ken
I
Walls,
messaged him yesterday. I believe it's the 29th.
Okay, that's perfect. That's perfect. So Ken Walls, that's going to be a big show as well. Ken is he's up in Ohio. He manages people in 50 different states. But Ken understands. Ken was like me about 8 years ago. He was figuring out Facebook Live, and he actually started his show. Now he's done over 1,000 shows. Wow. And his business has, I won't say it's 10x. We'll let him tell you the story, but it's at least 4x. His revenue of his business has 4x'd simply by doing a live show every day and getting on Facebook and letting people know he knows what he's talking about.
Well, it's definitely cost effective.
Yeah.
I mean, this thing is definitely cost effective. And I tell you, one of the things that I've learned over the years, and a lot of people I think have problems with this, you know, one of the things that we're always, we want to be good stewards of our money. We want to be tight. Let me tell you what, Michael Jordan had a coach. Mm-hmm. You pay advisors, you find somebody that's worth the money you pay them. Mm-hmm. They're worth a lot more than what they cost you. And I mean, somebody that's got a proven track record, know what they're. I have consultants that I use. I pay every month. I don't want to pay a guy to do this. I don't want to pay. Well, I think we need to, use good judgment when it comes to that. But I think in our lives today, as complicated as things are, we all need an advisor. Mm-hmm. I'll tell you something else. One of the things I've learned in my business, and it sort of, I kind of adopted this understanding. I sort of put this whole theory into play. Life is not a zero-sum game.
Right.
One of the things that I think we get caught up in, and I think it's human nature, we think, for this guy to win, I have to lose. And I lose if this guy wins. Well, what some of us have figured out, and you talking about giving away information, helping other people, what we find is pretty soon, guess what? It's not a zero-sum game.
It's not.
We can all win. I can benefit when you benefit. We can all get better and all together move in the right direction. So it's not, I think that whole mindset is sometimes lost in people. And as a result, I think it holds them back from any reasonable form of success going forward. Whereby they're so afraid that they're going to give somebody else $1 that they might not deserve, and they feel like they've been beaten out of it, that they fail to realize that life is not a zero-sum game.
So let me ask you a question to that point. So I don't want to sound woo-woo again. That's when people, the prosperity, name it, claim it type mentality, but there is a real thing, a prosperity mentality. I feel strongly there's a prosperity mentality. Now,
I agree.
Okay, great. I'm glad.
Yes, I agree.
I didn't want to have to go into a debate with a financial advisor on financial.
I agree 100% what you're saying.
Okay, so, I seem to know some super successful people with a lot of wealth that aren't tight. They're liberal with their spending. Yeah, you got to stay close to it. He's going to make sure. He wants to make sure you sound good because you already look good coming in here out dressing.
Well, I didn't expect to get on the podcast today. I was just coming to look at stuff.
All right. So, but I know some super successful people that are not tight.
Right.
They're liberal.
They are.
With their
very charitable, very giving.
Okay. All right. Because I think that's a flaw now. And I know you probably the majority of your customers are tight. And I think now this is just a theory. I do not know, but I think that the guys who understand that tight's not the answer and being liberal with your charity investments and it's probably the guys who win the most because they don't think that somebody has to lose in order for them to win.
Well, I think you're absolutely right.
Okay.
I think they figured it out. They figured out that there's I've got a very close relative that if somebody, boy, I mean, you know, he pinches that dollar. He's worried to death that somebody else is going to get something over on him.
Mm-hmm.
And he's been that way all his life. And I think ultimately I think he's got a mindset that holds him back from the success that he could have had. And he's on up in age now. He's 80 years old.
Yeah.
But I'm saying, and another thing too, this is something that's just, you know, philosophical, but one of the things that doing what I do at Story Wealth Management, I meet with people every day. And when I get back to the office, I got folks to meet with. Okay. Mm-hmm. And I'm going to sit down, and my job is to try to help people solve tough financial problems. We manage assets. That's part of what I enjoy, but we sit and do a planning practice as well. One of the things that I've found over the years, and I've met with hundreds and hundreds and hundreds of people. We serve hundreds and hundreds of families across, you know, different states. I want to say right now it's 12 states. But the reality is, you know, I see people and I've noticed that it doesn't matter how much money they have. It really doesn't matter how financially successful that they were in their life. I know people who are filthy rich, some would say, and they're miserable.
Yeah.
And then I know people that have plenty and they're happy. And I've always wondered, okay, what are some of the characteristics that makes these people happy and solid with where they are in life versus this guy who's miserable? And it's almost like the money that he's been able to save and put back and, you know, sacrifice to put back, he's miserable. What is the difference? And I will submit to you that the happy people have a positive mindset toward charity, toward expansion, toward helping other people. And not only have they been successful, but they've got that spirit about them. So they're willing to share, and they know that the world is not a zero-sum game. We can all benefit and from making good decisions and helping one another.
I accept that submission, and I will also say that I think it's about a scarcity mentality versus that.
I agree.
You know, versus
that's a great way to put it.
Yeah.
I was looking for that word, but that's it.
It's a scarcity mentality. I know guys with millions and millions, with big incomes and the successful job, the high paying job, everything. You know, everything looks right, but they're scared to death they're going to lose $1.
That's it.
They don't even. I mean, I'm talking about people, and I'm no financial advisor, but. You know, these type of guys, please don't get mad at me, but these type of guys that are hoarding gold and silver, you know what I'm saying? Because they're scared that the economy is going to crash. Not that I don't have gold and silver. I do too. But I'm just saying that scarcity mentality. I had a guy tell me when, you know, it was when gold spiked up above 2,000 for the first time. I just called to check on him. I said, "You doing okay?" He said, "Man, I've been waiting on this for 15 years." I'm like, that's a terrible mindset. Though.
Well, it really is.
You're waiting, you know, now, okay, the world's going to crash, but I have my gold, you know, and my silver. And so there, and my storable food and all that, you know, not that you should not be prepared for whatever. If you're a prepper, that's wonderful. I prep some too, but I don't have that mentality. I have the mentality that we're going to produce. And we're going to produce and we're going to add value for it. So, and I'm kind of skipping around here, but you're talking about mentality in zero-sum game. I just figured this out the other day, and you're more of an economist than me, but like how wealth is created, and there's basically can be infinite wealth. You take a house or you take a piece of property that has nothing on it, and you pay somebody, just say $100,000 to build a small house or structure on it. Okay. Their labor just created another, because now they have the $100,000 and you have a house and property that's worth $100,000. So $100,000 became $200,000 and both of you still have $100,000 of something.
That's it.
You know?
Yeah.
And like,
right.
it's not like a food, if you have food, you pay $1 for the, $5 for your food, you eat the food and it's gone.
Yeah.
Now only one person has that $5. So labor creates wealth. Is that true?
Yeah, labor does create wealth. The other thing is it brings to mind, a lot of people don't realize, they say, this stock is risky and this, I'd rather buy a piece of real estate, and there's some merit to real estate. One of the things that we do, I'm going to put a plug if that's all right.
Sure.
One of the things that we do is we give folks in all locations the opportunity to invest in real estate investments that are not just in Smith, Tennessee, or wherever. In other words, we're able to put together real estate holdings where people are moving to Austin, Raleigh, Nashville, Tennessee, Asheville, North Carolina, Ponte Vedra, Florida. I mean, we're able to give you exposure to those type real estate markets where there's a rising demand, and where there's rising demand, there's rising prices. Mm-hmm. So one of the things that we do for our clients is provide them with those type of opportunities. The other thing that I'm going to say about, this property, like you just gave the example, mm-hmm. A guy spends $100,000, he builds a house and he rents it out. That works. The other thing is with stocks, and this is where I would say, you say, well, Russ, and I've had this question. Mm-hmm. So Russ, would I be better off to just buy and hold real estate over the last 50 years? Which one has outdone the other? Well, it ain't even close. The high quality, good salt of America companies, these corporations have smoked real estate in most any market that you were lucky enough to have exposure to. Well, why is that? My argument is, and the reality is that when it comes to equities and things like Apple, Facebook, these disruptive technologies, what my industry refers to them as, they're organic. And what I mean by that, the stocks are not limited by time and space. They're limited by supply and demand. And as the demand continues to rise, the value goes and increases the market cap. Mm-hmm. Okay. The capitalization of the valuation of those companies keeps growing. So they can grow and they can split and everybody can participate. And then more people, they make more money, they can grow. So, one of the things you have with, and people don't think about this, real estate, regardless of where it is, it's not a bad investment per se. I would argue that there's different types of investments for different investors trying to achieve specific objectives. Mm-hmm. However, when it comes to stocks and what makes them so attractive and where they is the fact that they're organic and they're not limited by time and space. Does that make sense?
It does make sense. Yeah. It makes total sense. You have, so I had a show the other day, Smith, make a big note of this. Let's use this clip to play off of the clip the show that April and I did, what rich parents teach their kids that poor people
that was a great show,
don't even know. So I want to get that we did that without expert, we're not an expert, but we do have I have
you got
learned
kids.
I do, and I've learned
an expert. Yeah.
I've learned from a lot of people, I've learned from a lot of books. Okay, this is a terrible misnomer right here. I think that's the right term. This is bad information. Buy real estate. What do I mean by that? My grandmother, vice president of bank for 29 years, her husband, my grandfather, died early, left her a huge farm. Only thing it did for her was give her taxes. If you don't real estate, you might get lucky. And that's what I try to explain to people. Real estate, now there's different types, and Russ can explain what he means by the real estate that he advises people to invest in. Russ, would you tell your children, you have children, would you tell them to buy a piece of vacant property as an investment?
Depending on where it is, but probably no.
No, I mean,
because it's not generating any income.
No cash.
It's not doing anything for you except generating a tax bill every year.
Tax. So that's just like insane to me. People think real estate. More people have become millionaires through real estate than any other thing. I don't even think that's true. I heard that, but I know lots of people that have, all you got to do is find somebody to trust and give them money regularly, not give them money, but allow them to place your money into these companies. Let's face it, man. The United States of America has produced some massively successful, huge companies. And the cool part is you can benefit from them being hugely successful if you invest in their stock.
Exactly. One of the things people don't really see, and I, when I get out and I walk in the afternoons, I stick my AirPods and I listen on my iPhone, and I think a lot of people do the same, right? The reality is I'm walking along and I'm listening to a podcast, and I listen to these guys from Goldman Sachs, Morgan Stanley, Wells Fargo, wherever I know that there's a guy who's chief economic strategist for a firm, First Trust. I listen to his podcast every time because I find their information. Now, I cull a lot. There's a lot of noise that I don't want to hear and I don't listen to. But as an advisor, my job is to obviously help my clients, be successful when it comes to investing this money. And I've learned a few things over the last 26 years. One of my favorite stories, okay, and it's impacted me probably more than anything that I can. One of the very influential situations. I had a guy out here. He was a farmer. He's passed away now. But when I first came to town, he and I would have conversations over the telephone. He said, Russ, and he had a very successful investment portfolio. He had his money with 2 or 3 different investment firms. He consolidated that all with me after I was around for about 6 or 8 months, and I was local. So that meant a lot to me, having somebody close by he could get his hands on. But here's what's interesting. I'm going through his statements, and he and I are having our 3rd meeting together. We're talking about what he's trying to do, what he's trying to accomplish, this type of thing. I said, what caused you? Because you're here and you're a successful farmer in South Georgia. One of the things I find that's unusual is you have such a large investment portfolio in these stocks. He said, well, I'm going to tell you. He said, years ago, I had a good year and I started making a little money. The farm program was positive. We had this, and this. And he said, I decided I was going to try and have of my net worth, my wealth, if I ever was able to accumulate any, I wanted about 1/3 of my net worth to be in property, farmland, local property. I wanted 1/3 of my money to be in CDs at the banks so I could go down and get my hands on them. And I wanted 1/3 of my money to be in stocks and good quality investments. And he said, I've gone by this advice since I started. And this guy had millions and millions of dollars in his investment portfolio before he died. He passed those on to his children. One of the things he used to say, Russ, I ask myself 2 questions before I want to invest. And I want you to know that anytime you have a recommendation for me, I am going to ask these 2 questions behind your recommendation. Number 1, in 10 years, do I think there's going to be more people using these goods and services around the world? Is their business going to expand? There's going to be more people using their products and services in 10 years. If the answer is yes, I go to the next question. Next question is this company in a position to maintain its leadership role? Are they a leader? Are they going to continue? Okay, if I can answer yes to those 2 questions, then I'm interested in a recommendation that you have. He said, I wanted to keep 1/3 of my value, my net worth in stocks, 1/3 in CDs, and 1/3 in real estate valuation. He said, that stock horse, those investments left the other 2 a long time ago.
I was going to say that. I really was, because listen, you've seen my entire net worth portfolio, and I was looking at those same things. You have real estate, you have stocks, you have cash, there's different
cash, CDs,
gold,
bonds,
silver,
maybe gold and silver,
rental property versus farmland, things like that. My business is my cash producing biggest asset. So I make my biggest investment back into my business.
There you go.
And I hope that it continues to be a leader. And I plan on it, being, and I'm not speculating, because I want to talk to you about speculating also, but I do have a track record of success. So I feel like I'm going to get the best possible return investing in my people and into my business. Any surplus income, any surplus profit, I've either bought real estate, gold, I've either bought farmland, rental property, gold and silver, home to live in or stocks. It ain't even close. Other than my business, the stocks is the only thing with growth and, some growth and or cash flow. You can explain that better than me, but a farmland is a tax write-off. That's about the only thing it's good for. Maybe 20 years from now, you may have enough cows that's going to make a property, right? And you never want to sell your farm.
Well, and it's fun too.
It's fun, but you never want to sell it. So you're building equity in something. You're building equity, hopefully tons of equity. It's no good till you need to use it. Gold and silver is going to sit in that safe or that safe.
Eat it.
You can't eat it. And the only thing gold and silver is ever going to do is if we have not a pandemic, but if we really have like financial collapse to where people really have to use their gold and physical gold and silver.
Yeah.
So that's total, just a,
and at that point, you'll probably wish you'd invested in guns and ammunition.
Absolutely. So, we're pretty solid there too. But anyway, your house, your home, it's a wonderful place to live. Hopefully, it builds some equity, or doubles over because of inflation and things like that. But there's no, and this turned into a stock show, it sounds like, but which is fine. But that's my stocks have outgrown anything by far, and especially the ones that I did get in your model. But I want to ask you about two things, because how much time have we got?
We got about 13 minutes.
Okay, because Grant's show comes on at 12, and we like to promote and get people watching his show as well. But I want to talk to you about two things. The first thing is speculation. So, I ask you, would you recommend to your children, would you buy this piece of property? It's sitting on a lake. It's going to sit there for 10 years and paying $100,000 for it. One day it's going to be worth $1 million. Or there's just this new IPO coming out and it's going to take off. And even with Tesla, which is talk about valuations just skyrocketing, people are counting on them being a leader one day because they don't produce anything right now other than rockets that look fun. There's a difference between speculating and investing.
That's right.
Okay. So do you speculate?
Well, sometimes it gets so overwhelmingly, we will, but I'm very limited when I do.
Mm-hmm.
I'll give you an example. I put an entire portfolio together not long ago for my clients. We call it the COVID-19 portfolio.
Mm-hmm.
Back in March, when everything went down and we knew everything was oversold, and that's an investment term, but we knew good and well that good quality companies had gotten beat down way below what their valuation was, and based on any metric we wanted to use to do an analysis to determine. Consequently, we came up with what we call the COVID-19 portfolio. And basically what we've done, we went in and bought, and if you want to call it speculating, we did. But I'm looking at these valuations and looking at the stock prices. I'm like, these things will probably double in the next 12 months. Mm-hmm. So we used our computer model that we've used in the past, that we used to run our growth model, our value model, our income model, all these different models. We've got 5 models that we primarily use to help clients achieve their goals and to manage the money. But we used a variation of that to give us good quality companies, beat down in price, but also they had to have earnings. They had to be in a financial situation where they could weather the storm. They had to be U.S. based companies. Okay. So, when things got hit so hard, like Delta Airlines, Delta's in the code. Well, it got really hammered. And by March 26th, it was so low that it's like, Delta's got money. They're not going to go bankrupt. This thing sooner or later will change. Okay, people are not going to stop flying on airplanes. So that was one of the stocks that qualified. Mm-hmm. Carnival Cruise Line had been beat down, but guess what? Carnival's not a U.S. company. Okay, no support from Trump and no support from PPP or whatever. Mm-hmm. The other thing is they didn't have any money. So how are they going to weather the storm? They're going to have all these cruise ships parked. They're paying taxes and freight and whatever they're paying to keep them up. It doesn't look good for Carnival Cruise Line. So that's an example of one that made the cut. Mm-hmm. So we had about 21, 22 different stocks. So in that respect, it was like, give your clients an opportunity, if they wish, to buy into this aberration, if you will, mm-hmm. where we've got good quality companies that are down. Well, that portfolio is up, I don't know, 40 something percent since
Yeah.
I think but I mean, and so we were able to pull that off. But as a general rule, investing is where it's at. And I'll give you an example. Let's talk about this cannabis deal.
Mhm.
Okay, let's talk about that a little bit. And back in the 2000s, the same thing happened with internet stocks. You had all these different companies, and every IPO was going up in price because there was crazy dumb money going after really illegitimate type investment opportunities. If you go back and look, I want to say it was 1915. You know how many car companies were in the United States at that time?
I would say one or two.
Yeah, that was right. There was actually 360 some odd companies.
Really, car companies.
Car companies. Yeah.
Oh,
Yeah. I mean,
for the different.
Exactly, because the automobile was just coming on.
Right.
So
right.
it's kind of like, you say, well, I think cannabis and marijuana stocks, I think that as a theory, and theoretically, that if it's medicinal and it's going to help people, then there's going to be, but there's hundreds and hundreds and hundreds, probably thousands of cannabis companies. Well, going back to so sometimes you get kind of be smart a little bit. Okay, so let's go back. So there's 363 car companies in the United States. Well, which one of those is going to be General Motors and Ford, and which one's going to be Buick? We don't have a crystal ball. We don't know. Okay, but what we did know was there was 2 companies that manufactured rubber tires. Where do you think the smarter place would have been to invest money? I don't think there's any doubt.
Yeah,
you stand a much better chance of coming out investing in the 2 companies that make the tires that go on the car.
I'm still shocked that there was that many car companies. I'm in the car business, and I was like,
oh yeah,
had no idea.
Oh, there's ton, Oldsmobile, Buick, all these Pontiac. Think of the companies just in the last, 15 years that have gone out. Now they're all consolidated. But so there was tremendous consolidation. A lot of them went out of business. But anyway, my point is, we need to try to figure out sometimes, how to invest. I'll give you an example. Apple's an incredible company. Some of the things that we used Apple is, and I'm still on the Apple deal, but it's an incredible company. I think 10 years from now, if you bought Apple today, you're going to be glad you held it. Okay. As an investor, is Apple going to continue to be innovative? Probably. Is somebody going to come along and shake it? I doubt it. Okay. But I don't know that. However, what about AT&T? Well, 5G and this technology is happening. Okay. AT&T, while Apple's selling it, 32, 33 times, expected earnings for next year, you got AT&T sitting here paying a 6% dividend while you wait, and they're getting exposure and benefit to some of the same things that are going to drive Apple's earnings over the next 10 years. Perhaps we need to consider looking at AT&T. Now, it's kind of boring. It's not Apple. It didn't just split 4 for 1. But if the question is, where can we find the best investment opportunity? I think we should at least consider companies like AT&T. So an investor and a speculator, you know what? I've heard this said before. I've heard it said a lot of times, and I find it over 26 years being in the investment business, meeting with people every day. Guess what? Pigs get fat.
Yeah. Hogs get slaughtered.
Hogs get slaughtered.
Yep.
And sometimes we really have to try and separate and determine what's the wise investment versus the short-term hot speculation.
Yep, absolutely. And I'm running out of time, and I got to cover a couple more topics. So today's show is about marketing and sales. And obviously, we have a person on here today that is an expert, and we've shared some of his posts. What I would like to see Russ do even more often is keep giving us this information 10 times a day, bam, 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 on a post, on your Story Wealth Management, and on your personal page. So I'd like to see that. If you would like to see Russ do that, please comment, Russ, please give us more. All right, now I got to ask about this. We only got about 7 minutes, and this may be too complex of an idea to talk about, but this is just a personal question that I'm curious about that I do not understand. And I'm above average when it comes to understanding free market economy and where money comes from. And this is very bizarre to me. Can you tell me the difference between monetary stimulus and fiscal stimulus?
Well, I can. I think they're pretty much one and the same to me. There's different ways the Federal Reserve can try and stimulate the economy, and they've got two mandates supposedly. One is to keep inflation at check, so keep prices from going up out of control, and the other is full employment. Well, full employment's impossible because not everybody's going to go to work. There's some people, as my grandfather used to say, that wouldn't work in a pie factory.
Right.
But ultimately, theoretically, that's their goal. But the Federal Reserve, there's an old rule when it comes to investing, and especially when it comes to trends of 3 to 5 years or whatever. That's don't fight the Fed.
Right.
If the Fed determines to reduce and control growth via interest rates rising, if they think the economy, if there's too few goods and services being chased by too many people, then they're going to determine ways to try and fix that. And they use that through fiscal policy. They raise interest rates.
Mm-hmm.
They increase or decrease M1, M2, M3, which is money supplies, going to banks, going to different there's different ways to figure it. But I think monetary policy probably, and I may be wrong because you hit me with this a little bit, but I would say that monetary policy is the policy that the president, the executive branch, and probably the legislative branch has put in place to try and move the economy into expansion. A lot of people don't realize this. They go, well, you know what? I'm afraid the stock market's going to go down. Well, it might go down short term, but you got to realize everybody. You're talking about prosperity versus scarcity, because I love those terms, and that's really I was searching for that earlier, but I think that's really what it boils down to. Our economy, our country, our world, if you will, is based on expansion.
Yes.
What do I mean? Well, we got a so-and-so $1 billion deficit. How in the world are we going to ever pay that? Well, I'll tell you how we're going to pay it. We're going to pay it, not that we ever will, I'm saying, but I'll tell you how we're going to try to pay it. Okay. That's through a stimulus that increases valuations and expands the economy. If you're going to have more people in the economy and they need roads, they need goods and services, they need government services, the only way to do that is through increased revenue coming into the federal government, state government, and local. Well, how do you increase taxes coming in to serve these people? Well, you do it through an expanding economy. Only way you can do it is by, if there's more money being made and the economy expands, then there's more money, more people paying in taxes. So you can rest assured that the government may allow, and I mean this, I'm not being a true capitalist when I say this, but I'm being honest, and I believe this is the case. They're not going to allow the banks to fail. They're going to not allow the system to go down the tubes. And the way they're going to do it is they're going to always be vigilant to make sure that our economy is expanding so that we can continue to do what we're doing.
Right.
Does that make sense?
It does make total sense.
Yeah.
So the Federal Reserve has a responsibility. You said, because I know this is in the weeds. We're about done with time, but the Federal Reserve, their job is, you said,
they have two mandates. Basically.
Two mandates.
Yeah, they're full economy theoretically. They want everybody to have a job.
Yeah,
and they want to keep inflation in check.
Yeah. Okay. So that and then the monetary that comes from that's like the stimulus plan that's coming from Congress.
I would say the president sets policy pretty much. Congress typically comes along behind, but I would say that I know, especially in this administration, it seems that monetary policy certainly, been driven by the president.
That makes perfect sense. We're running out of time. It's 12 o'clock. It's time for the Cardone Zone over there. If you want to jump on there and see Grant's show. Hey, this is a great show. Thank you so much for coming on. We were talking about sales. Make sure that you understand the art of text message selling, and make sure that you're posting a lot. You want to be an expert, and you got to break through that loud noise. And remember, #Russ give us more. Okay. See you guys.